Hello traders, Cousin Vinny coming to you from theclosingprint.com, January 22nd, 2023. In this edition of your weekend video newsletter, we'll discuss the indices, all of which managed to close near the 200-day or above, along with international markets like ACWI, the so-called All World Index ex-US, with most of our indicators either bullish or neutral at 16 and 3 respectively. Only one is bearish, and that is the longer-term trend. In addition, all sectors did manage a bounce last week. We did have some laggards in industrials and military aerospace. The defensive sectors, XLP, XLU, XLV, also lagged a bit, but we do have a bullish indication from the XLY XLP ratio that's rising into this week. We also have international markets improving and a lot more stocks that were pushing higher at the end of the week. At this point, we have S&P 500 support at 3,900 and resistance at 3,950, and then 4,000 above that, with the vol trigger and zero gamma moving higher. Bottom line, going into this week, we have earnings, and we need to be cautiously optimistic in the short term. Starting off with the S&P 500, we're closed right at the 200-day moving average on Friday. We're still down more than 17% from the January 2022 all-time high. RSI, however, is above 50 and rising. Price is pushing higher. We are currently in this resistance zone and are looking for a follow-through this week if earnings can keep the momentum going. MACD is above its signal line. Volume did pick up last week as well, with an abundance of stocks moving higher on Friday. If we take a quick look at the number of stocks that showed relative strength last week and closed at highs from the IBD, we can see that the follow-through was across multiple sectors, with the majority of the IBD 50 closing green, showing potential for follow-through. Together with those stocks showing relative strength at highs, there's over 100 of these names across multiple sectors, as you can see, closing higher. That's setting up potential follow-through into this week, as earnings remain the focus of investors and institutions at the present time. We also have growth and value performing quite well, with growth moving back above its 21-day moving average, and value stocks also trending with the 21-day pointed up and to the right. We're looking for this to follow through in multiple sectors, with the S&P Equal Weight Index removing the weight of the big cap tech names from the calculation. We can see that we're breaking above this trend line after a retest of the 200-day area, 50-day, bouncing. The number of stocks trading above their 50-day have declined from the overbought area. That's also helping the bulls going into this week, with the number of stocks above the 200-day pushing higher after a short-term decline. As previously mentioned, we also have indices closing at or above the 200-day. The Dow Jones Composite of 65 big cap leading stocks closed above the 200-day back in early November and has remained above ever since, along with the Russell 2000, a risk-on indicator, closed above its 200-day moving average for the last week, looking for a follow-through as RSI is rising. Volume was above average on Friday, and we had MACD above its signal line. We'd like to see stochastics turn back up this week as many companies start to report earnings, along with its weekly chart moving above longer-term moving averages, pointing to a risk-on market at the present time, along with biotechs. The IBB NASDAQ Biotech ETF is above its 200-day moving average since late October, has stayed above its 50-day. Note the 9, 21, and 50-day are above the 200-day, projecting risk on from this risky asset class. While I'm not a big fan of investing in Bitcoin, it has moved back above its 200-day moving average. 9 and 21-day have moved higher as well. I merely point this out because this is another risky asset class that is showing a risk-on tendency by investors at the present time, and may be an area where you might want to consider some investments in stocks like Mara or Riot, which have changed trends recently, indicating an increase in a risky appetite by investors. Volume has picked up over the last few weeks as Riot pushes above the 9, 21, and 50-day. 200-day is right overhead. Comparing the Russell 2000 to the Wilshire 5000, an even broader measure of market participation, we closed right at the 200-day moving average, the green line, looking for a follow-through in this broad basket of stocks, which includes small caps and some of those risky assets like Bitcoin miners. As the index makes higher lows, we're looking for a higher high and a push above this 41,000 area in the short term. If we can get those riskier assets to follow through, we should see breadth improving. This is the advanced decline percent for the S&P 500 in top panel. You can see at the top we have the 200-day on the S&P, and then the advanced decline percent. Mid-cap advanced decline percent is rising from 0 after a small pullback, setting up a potential energy source for a follow-through this week. Mid-caps, small caps, and the NASDAQ 100 in the lower panel have all turned up. That's a bullish sign to start the week, together with the NASDAQ McClellan oscillator, which is showing a bullish trend in breadth. With all of the indices at or above the 200-day, the only laggard we have is the NASDAQ 100. It is above the 50-day, making a higher low, a triple bottom, potentially leading to a test of the 200-day this week. Volume has been picking up, so I have a pretty good sense that NASDAQ 100 might follow through. RSI is rising and pointing to improving trend strength, while MACD remains above its signal line and stochastic starts to recycle. With risk-on assets pointing to a potential improvement and the NASDAQ 100 headed towards its 200-day moving average, we'd expect to see growth stocks picking up a bid this week, so watch for that. Look for a break of this downtrend, which would improve if the NASDAQ continues towards the 200-day, along with readings from the consumer discretionary versus consumer staples. As long as this is rising, we've pointed out over the last several weeks, that would be bullish for equities. Taken with a rising appetite for riskier assets, we believe this is showing risk-on appetite is increasing as we progress into earnings season. As we look at bonds and yields in particular, yields continue to hover around this 3.5% zone, especially the 10-year, which continues this fade towards the 200-day moving average. The 50-day rolled over. If this was a stock, you'd be thinking bearish at this point with a potential for a bounce. It needs to get back above the 50-day to start to be a problem again. And then it would be the speed of the move that would garner some attention. With that small move in the 10-year, we did have the 7-10-year bond moving a bit higher. It did pull back on Friday at the 200-day, looking for the 9, 21, and 50-day to cross back up and to the right, along with TLT, the 20-year bond, looking for it to get above the 200-day moving average. At the same time, we'll be looking for the US dollar to continue this fade below the 200-day moving average. 9, 21, 50-day have all turned lower. RSI remains below 50. The implication here is that international markets will improve, and growth stocks that sell their goods and services overseas will also have a potential for a tailwind with a weaker US dollar. Companies like Microsoft and Google, Nvidia, etc. in addition to stocks like Coca-Cola and 3M, all of the industrials which sell products overseas would likely be impacted by a lower US dollar, giving them a bullish tailwind. And with copper moving higher, that's telling you that we have improving economic conditions. At the same time, precious metals priced in US dollars, as the US dollar is moving lower, gold and silver are moving higher. There's countless articles out there about a potential squeeze to $30 an ounce for silver. Also in a bullish trend, it has been consolidating for the last few weeks, so we're looking for a breakout in silver as the US dollar continues to move lower. Counter to most commodities, Brent crude and West Texas crude have been turning higher, moved back above their 9, 21, and 50-day moving average. That would put a crimp in consumer expenditures if crude and gasoline start to move higher again. With gasoline moving higher for the last 6 weeks and moving into this Kirby area and a test of the 200-day likely in the short term. We've had a marked improvement in the sector heat map, moving from crimson red about 6-7 weeks ago to more lime greens. There is a little bit of oranges starting to creep in here, so we'll have to keep an eye on the sectors. With those international markets improving, all closing green last week. Argentina is still leading, as we saw last week, in a very bullish trend. Volume increasing markedly. I wouldn't chase it up here. I'd be looking for little dips like we had on Thursday for potential entries. With our position in emerging markets improving as well, moved above the 200-day a few weeks ago, and now the 9 and 21-day have crossed up. The 50-day will probably cross through the 200-day in the next week or two. So watch for your emerging market positions to appreciate as price action indicates institutions are buying. We also have sectors improving as well, most of them moving higher last week. As we pointed out previously, IBB, biotechs are a risky asset class along with XBI. They're making higher highs and higher lows. Most sectors pushed higher last week. We did have XLP, XLU, and XLV below their 21-day. Those are defensive sectors. We'd still like to see them pushing higher. That would add to the tailwind and improvement in breadth. But for now, we'll just take the cue that most sectors are being bought. Broad market participation after a little dip last week. The IBD 50 this week is populated with many names that look like they'll follow through. The majority of the list looks bullish. Allegro Microsystems, that one's above the 21-day. We pointed that out over the last couple of weeks when it was added to the IBD 50. RSI is above 50, showing strength of trend remains fairly strong. Looking for a follow-through. Asbury Automotive, higher lows, higher highs, looking for a test of that 195 area. RSI is pointing up and to the right as price action remains above the 20 and the 50-day moving averages. ACLS, been on the IBD 50 for several weeks, continues this bullish trend over the last 3 weeks. Higher highs, higher lows, consolidating right near 100. RSI showing muscle or persistent trend strength. Catalyst Pharma, also looking strong. It's been trending over the last several weeks above its 21-day moving average, the 50-day, both turning up and to the right over the last few months. We also had Cadence Design breaking above this 175 zone on Friday. Looking for the follow-through with RSI pointing to strength of trend. We also had many stocks from the oil and gas sector like ConocoPhillips, Chevron, Oxy, Phillips 66, all pushing higher last week. We're looking for Marathon Oil and other smaller oil and gas names to continue. ConocoPhillips, the 21-day will probably pass up through the 50-day shortly. We're looking for a breakout above 122.50. RSI is pointing to strength of trend. Additional stocks in the oil and gas sector, Diamondback Energy, FANG, looking for a push towards that 150 zone. The 21-day looks like it'll cross up through the 50-day shortly. EOG, ExxonMobil, and Dyno, HF Sinclair, all from the same group, looking good. HF Sinclair, Dyno, looking very strong. Looking for a follow-through into this week. RSI pointing to strength of trend. This one was pointed out by Astro and a number of other members in the trading room on Thursday. Looking for the follow-through this week as RSI points to strength of trend. Watch for EOG Resources and ExxonMobil to follow through as well. Hyatt Hotels, many of the hotel stocks are looking good, having pushed higher over the last several weeks, breaking out above 105, with RSI showing strength of trend. Payment processors and credit card companies look fairly strong. Jackson Financial pushing higher last week, along with Shift for Payments. FOUR has been trending over the last several weeks since appearing on the IBD 50 about a month ago. This one continues higher through the month of December into January. The home builders also showing strength. Meritage Homes trending along its 21-day, just tested it on Thursday and Friday. Most likely will follow through this week. We're looking for truckers and transport stocks like Old Dominion to continue higher. We also had strength in the airlines like Ryanair, Delta Airlines also pushing higher, among others. Ryanair is sprinted above the 21-day a few weeks ago, starting to consolidate a little bit, looking for potential entry. As volume is increasing, RSI showing muscle, strength of trend. Additional builders like Pulte Home, Meritage Home, all of these looking good, pulling away from the 21-day moving average, flagging over the last 3 days. We're looking for this buying action that showed up on Friday to produce this hanging man candle, potentially to lead to higher prices. So watch Pulte Homes and the other home builders and home improvement like Home Depot and Lowe's for potential trades. Chinese stocks were also active on Friday, looking for that follow-through. Pinduoduo, JD.com, Baidu, Baba, FXI, all showing strength last week, looking for a push higher this week. On the China reopening narrative, semiconductors also had a fairly good showing last week. Lattice Semiconductors on the IBD 50, so is Taiwan Semiconductor. Looking for this to continue. Flagged out, closed at the highs of the session on Friday. Looking for a follow-through. Note the 20 and the 50 are both turned up and to the right. RSI showing strength of trend, and volume has been picking up over the last couple of weeks. Valero Energy back on the IBD 50. Note the 20 and 50-day cross. Nice consolidation here on Wednesday, Thursday, with a potential follow-through day on Friday, pointing to improving conditions in Valero Energy coming into this week. Also note the volume over the last couple of weeks as the stock breaks higher. Additional pharmaceutical stocks like Vertex Pharma with good earnings, about 20% revenue growth in the last report in October, doesn't report again until the first week of February. Moving above the 50-day, watching that 20-day turning, potentially crossing in the next few weeks, and a retest of the 325 area likely in the cards over the next couple of days. Square also being pointed out by Mr. Flood on Friday. Many of you are already in this, looking for this continuation above the 200-day moving average and a follow-through this week. Block looking bullish with potential to move into this volume by price area where there's very little, with resistance tapering off as we proceed higher, with the company reporting a 17% revenue growth year over year in its last report, with the company reporting again in the last week of February. Additional stocks from the relative strength, stocks trading at new highs, listed below. These look like they might follow through on Monday and Tuesday. Just check earnings dates before you take any new positions. We'll do the same, with the majority of these stocks closing very strong to end the week, giving us an opportunity for a follow-through as institutions appear to be buying across multiple sectors. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for January 22nd, 2023. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend, take care, and we'll see you in the morning. Ciao.